Hi, this is Mark with ValueCharts.com. We're going to take a look at a great short selling opportunity that occurred just 2 days ago in Amazon stock. So basically, taking a step back, the Amazon rallied sharply, gapped up in late April, and then became significantly overvalued. Now, we're using the value bars overlay here to communicate market valuation. This is a very, very powerful indicator derived from value charts. To learn more about this, go to valuecharts.com. But certainly one of my favorite indicators to use in the market. And by overlaying this on traditional price charts, we can see both information relating to cost with respect to a traditional price chart history and everything that we can derive from cost charts like support and resistance, trend direction, geometric patterns, and at the same time, with the color overlay, we can also get a sense for market valuation. So value bars communicates that as an overlay on top of traditional price bars. But basically, we saw the market gap up in late April. It sold off until really early June, and then it has been experiencing somewhat of a corrective move to the upside here. I actually sold this market in moderately overvalued territory here. I can't recall whether it was the third or the fifth. Actually, it was the fifth. So right after the 4th of July. And I had the expectation that momentum would start to pick up the downside. And using the MQ momentum indicator, I used to confirm this. But I was also looking for a break of the trend line as well. So an interesting thing happened. We started heading down towards the trend line. Amazon actually came out with an announcement relating to a new product and opened higher on the 10th and eventually broke that trend line and went down. Well, the shorting opportunity that we're talking about here occurred when Amazon came back up and retested the trend line. So these can be very, very low risk trades. And we'll see where this ends up going, but I'm betting that we'll see more downside from here. But basically, if we look at this one example, this price bar over here, where we can see the very top tip of the price bar is yellow. And so what that signifies, green is fair value or indicative of fair value. We tend to see markets trade for a market time frame combination within fair value approximately 68% of the time. And then overvalued, the moderately overvalued and above, we tend to see markets trade at those value levels approximately 15% of the time or less. So in a downtrending market, selling at moderately overvalued, which is reflected by the top yellow bar segments, is usually a pretty good bet. It's usually a fairly low risk, attractive place to sell in a bear market or a choppy sideways environment. Now, there's a lot more to using value charts and value bars than that, but from a very simplistic standpoint, that's what that represents. So we basically saw Amazon go up and retest this trend line here, and basically we came to the point right here in this one price bar where we are right at the trend line level, and at the same time we also have a moderately overvalued price point at the very high end of that price bar. So that could have been used as an opportunity to short. If I was not already long some put options in the S&P index, I would have been on the lookout for that. I was actually tracking that as a possible short. Whether I would have taken that trade or not, who knows? But it certainly is the tools when they align like this. You see a confluence of a trend line test along with the moderately overvalued price point or bar segment. Those can represent excellent reward to risk ratio selling opportunities. So taking a step back, we can see that price level occurred right around, call it 228.90 there at the top of that one price bar on the 20th. And we can see that the close now is at 223. So very low risk to the upside in this trade. And the story is still ongoing here, but I would expect that there's a good chance we can see the MQ momentum start to head south here, depending on what this market and the overall averages do for the remainder of the week. But we can check back on this. But this is a good, just a good example of how confluence using value levels along with other technical analysis can identify very strategic entry and exit points in the market.